And that led on to creating a startup, which did email on the first generation of smartphones. And then that actually led to Bitcoin, because you're in the tech world. Oh, Bitcoin broke $1,000. What's that? And then I had to learn about it. And so, yeah, my first involvement with Bitcoin, it was buying it in the tail end of 2013. And it's been a long journey since then.
So one of the things, obviously, that we talked about earlier is the fact that you do this on-chain analysis. Can you maybe just give a quick understanding for people of what that is and how it works with Bitcoin particularly?
Yeah, so one thing that's very, very unique about Bitcoin and actually the block money. So really the thought is we're in this kind of transition to a fully digital age where so much of our economy is online, and we didn't up to now have a digitally native form of scarcity, a form of money. And that's Bitcoin. And so that's the 10,000 years from the past to where we are now. And that sort of one picture tweet, I think I did. Yeah.
So, do you think that we get rid of fiat completely with the advent of Bitcoin?
Yeah, this is a really interesting thing when you look at 10,000 years of money, and you find that, we've had first inklings of gold coins and stuff for I think 700 BC. And now we talk about money going from, world reserve currencies changing every 100 years. But you'll find that they were always tagged to gold or silver until this very, very brief experiment of fiat since 1971.
Close to 5% adoption.
Exactly.
Can you just maybe talk us through how you get to that number, what you're seeing? Mm-hmm. Assume it's to some degree on-chain data that's helping you get there.
Yeah, so the first thing to note is it's not my estimate, right? It is independent third parties that have each done studies with their own methodology. All I did was collect it and then build a trend line through it and throw out the ones that were so far out of the consensus of the rest. And the first studies were on-chain up to around 2014, 15, that's accurate, forensic clustering. Then Cambridge came out with a study, benchmark studies, multiple years of this. And they surveyed the entire industry looking at unique KYC accounts across all the exchanges. So people who have actually given their identity, and then they deduplicated that data. So that's very, very reliable and very, very...
For assessing Bitcoin as an investment last week, this is now, potentially going to be adopted by corporates and, of course, nation states. So
exactly,
this pushes things a lot further.
And MicroStrategy has really kind of been the proof in the pudding in a way with their Bitcoin strategy. Look at them. They're a software company that really was not that competitive by Michael Saylor's own words. They took on this treasury strategy, and now they're the best performing stock on the S&P 500 with NASDAQ, beating out things like
or even NVIDIA.
Even NVIDIA, yep, Amazon, Microsoft, so forth, Google. So
lately, just following your Twitter account, just to change direction a little bit, you're talking about something called Kardashev scale. And I think it's interesting to sort of observe you paying attention.
In an economy, everything uses energy, right? I like to say the economy is effectively an engine that eats raw materials and energies to spit out stuff that we want. And you can look at long-ranging graphs of energy and GDP, and they're pretty much one-to-one. And so that's also when we were a level 1 civilization, we're going to have that level of goods and services and so forth. So the economy is going to be hungry for energy. And if you want to secure your money you're using energy, it's compatible, and that will not break into the future to infinity. So the form of money, it's very hard to break a multi-thousand-year Lindy effect, but we're forced to do it in these coming decades. And it has to be in the movement of price. They could access the synthetics, and there could be, 100 million synthetic contracts of one Bitcoin equivalent to be bought.
So if we tie that back to, what you were saying about the Kardashev scale and sort of having this energy money as the solution to our historic atom money, is this somehow bringing energy money back to the paper money problem that gold was corrupted by, or co-opted by, I should say?
I think I don't really relate the two directly. It's just when we talk about the spot market and a real Bitcoin, that's secured by energy, and that is a very fair ledger and very hard to corrupt. Once you create a paper market around trading synthetic exposure to it, it creates kind of a dampening effect of how high the price can go. Because if there's a lot of people needing access to Bitcoin exposure, then a lot of people with fiat and you can print. And it was also the last cycle that we had an influx of paper. Right. So one of my to-do lists is to redo stock to flow, Plan B stock to flow, adding the extra flood of paper and to see if it matches, because it is being debased, but it's only a little bit. It's like 2 to 4% debasement, but I'd like to factor that in and see if it actually matches what the stock to flow targets are now.
How easy is that actually to do, though? I mean, it's pretty hard to track the derivatives. Obviously, on chain, when you're looking at real Bitcoin, it's much easier, I would imagine.
It's relatively easy because the exchanges publish their open interest. So it's just a matter of grabbing that data and adding it all up, which is done by Glassnode. So we've got a relatively reliable feed. It might not capture everything, but it's going to be better than not taking that into account. And so when you take derivatives and on-chain and you fuse them together, the models start to work really well.
Interesting.
We use fixed income. And it's like a cash bucket, shelters us from the volatility, and then the long-term wealth we think will come from the Bitcoin bucket.
Yeah, I think obviously very volatile periods that we've had historically. I think there's, you and I were talking about it earlier today, is this potentially, when you've got nation state adoption, corporate adoption to the degree that potentially we might have with Microsoft, is this potentially the last cycle, or was the last cycle the cycle where we're going to see an 85% drawdown? Are we reaching escape velocity for the price of Bitcoin?
Yeah, I once posted on X something like the last cycle, and I was completely wrong, because we did have another, 80% drawdown, I think, Richard. And I just see, and it's been largely true, that the drawdown's getting less and less as the size increases. That's normal. I also think that the